Let's talk about robots. Well, the time has come. Has come for robots. Robots have the benefit of being able to interact with the physical world and do things that otherwise digital information cannot. We know very clearly that the world has severe shortage of human laborers, human workers. By the end of this decade, the world is going to be at least 50 million workers short. We'd be more than delighted to pay them each $50,000 to come to work. We're probably going to have to pay robots $50,000 a year to come to work. And so this is going to be a very, very large industry. There are all kinds of robotic systems. Your infrastructure will be robotic. Billions of cameras in warehouses and factories, 10, 20 million factories around the world. Every car is already a robot, as I mentioned earlier, and then now we're building general robots. Let me show you how we're doing that. Everything that moves will be autonomous. Physical AI will embody robots of every kind in every industry. 3 computers built by Nvidia enable a continuous loop of robot AI simulation, training, testing, and real-world experience. Training robots requires huge volumes of data. Internet-scale data provides common sense and reasoning. But robots need action and control data, which is expensive to capture. Practicing in a lab is different than the real world. New policies need to be field tested. Developers use Omniverse for software and hardware in the loop testing, simulating the policies in a digital twin with real-world environmental dynamics. As the robot brains execute their missions, they perceive the results of their actions through sensor simulation, then plan their next action. Mega lets developers test many robot policies, enabling the robots to work as a system, whether for spatial reasoning, navigation, mobility, or dexterity. Amazing things are born in simulation. Today, we're introducing NVIDIA Isaac GR00T N1. GR00T N1 is a generalist foundation model for humanoid robots. It's built on the foundations of synthetic data generation and learning in simulation.
Coming up today, stocks continue to slide. A huge crash and bullish sentiment. Investors dump US stocks. Retail investors aren't buying the dip. Tesla gets trashed. Global recession fears build. And all the latest from the Nvidia AI conference. Let's go, guys. And welcome back, everybody, on yet another day of weakness and mega cap tech. Getting a bit of up down this week, with once again the Mag 7 trading on their own. Meta down over 3%, Tesla 5%, along with the semis headed up by Nvidia, which is interesting. Kind of reaction by the market here to Nvidia on the day Jensen Huang just spoke, coming out with what I thought are some pretty interesting things. But the market didn't seem too impressed. Nvidia down over 3% today, although not really on big volume. In fact, it was below average. Normally big selling days come with big volume as well. In fact, just looking at the SMH semi ETF, also just pulling back on really weak volume here. And like I said, Jensen Huang just announced not only a new Blackwell Ultra chip in the second half this year, but next generation Rubin super chip, named after the astronomer who discovered dark matter. Rubin will succeed its Blackwell lineup as the next generation of the company's AI systems. They're expected to start shipping in the second half of next year. So it looks like Jensen Huang is trying to stay one step ahead of his competition. So only in the middle of last year, he came out with Blackwell. Now we're already on to Rubin, which is apparently going to have 14 times Blackwell's computing performance, exponential growth in compute power, which even though his chips are getting a lot more powerful, he thinks the demand for computing is going to exceed that. Thanks to agent AI, physical AI, robotics, humanoids, and many existing technologies like General Motors is deepening its ties with Nvidia in hopes of improving its autonomous driving technology and manufacturing operations. Like I said, all that sounded pretty good to me. Not only the breakthroughs in technology, but the demand for it as well. Clearly a secular trend, but wasn't enough to get the market excited highlighted for today at least. As I'm seeing it all over the place, pessimism is really peaking here. In fact, the most widely followed investor survey showed a huge crash in bullish sentiment, and that's Bank of America's Global Fund Manager Survey, now approaching lows that were seen in previous crises and panic moments in markets and around the world. In addition to a big flight from US stocks, remember the global stock market isn't correcting, it's pretty much just the States and what's a rotation instead of a global stock sell-off. And we can see that once again in the Global Fund Manager Survey. The biggest drop in US equity allocation on record, massive monthly change, almost negative 40% change. On US stocks, up the top, Eurozone, UK, and emerging markets, along with increased allocations to cash. Not even retail investors appear to be buying the dip. There's actually been net outflows over the past 2 weeks in this correction, about $4 billion from retail investors. And we can see that in the AAPL Investor Sentiment Survey. Looking at the 3-period moving average, we're at levels we've only seen 3 times in the last 35 years, all almost marking the exact lows of what were actually bear markets. But this time, we're not technically in a bear market, we're just in a correction. But fear and pessimism has spiked. Look how quickly we've got there on this chart just here, compared to even in bear markets. Took much longer to get there. We've just got here in record time. But just stepping back, looking at the big picture, valuations are not that bad. Considering the growth in corporate earnings per share and the fact that rates are only around 4%, it's not a high hurdle to jump over to find stocks with earnings yield in excess of that. In fact, pretty much all sectors already do. Looking back over the next 12 months, looking forward, the yields are even better. But PEs under 20, like I said, in a 4% rate environment, are really not all that bad. And in fact, some of them are getting down to the low end of their 10 and 30-year ranges. But some of the most popular and well-traded stocks out there are getting punished, like Tesla. Often ranks the top or near the top of options trading volumes, along with Nvidia. And when you have so much participation, so much volume, so much headline, it just creates a lot of volatility. But it isn't just headlines. There's now an army of lunatics out there trying to burn Tesla to the ground. And these are the same people that consider themselves righteous, environmentalists. But we've seen this sort of behavior before. Kind of reminds me of 2020, with a lot of the mainstream media enabling it. And so no real surprise to see Tesla down another 5% today. I think it's very likely we'll come down and test the 200 level and hopefully get down to 188 so I can buy the dip on this again. Because whilst this is very much an issue in the short term for Tesla, it's not a good thing when you got a bunch of lunatics trying to burn your business to the ground. But ultimately, they will fail in the long term. This brand will succeed. And even if it means Musk stepping back as CEO to president or even strategic advisor on the board, he's still the largest shareholder. He'll still shape the future direction of the company, but maybe he can throw a bone to the media and lunatics to feel like they've won, and he can kind of step out of the media spotlight a bit and let someone else do the day-to-day and face the media as CEO. I'd be totally fine with that as a shareholder. I think that's inevitable at some stage anyway. And I think ultimately we'll look back on this as a gift to the bulls, an opportunity right at the cusp of the most pivotal points in this company's history, going into robo-taxis and humanoids. And those claims by those deranged lunatics that Musk is a Nazi because he made some gesture at a conference are ridiculous. First off, Musk is a genius with Asperger's. He's going to do some weird stuff every now and then. He's trying to be funny. But is he actually a Nazi who wants to kill millions of Jews? Well, the answer is no. Because even the head of the only Jewish state in the world, their homeland, as recognized in the Islamic Quran almost 2,000 years ago, Israel, and their leader and prime minister came out to his defense. So for all the lunatics out there, he doesn't want to kill millions of Jews. He's actually almost single-handedly prompted the global automobile industry to go electric. To make the world a more cleaner, safer place, it's just a good excuse for lunatics to try and attack someone partnered with Trump. But let's not forget they're so stupid, they set themselves on fire as well. And in fact, they just came out last week and asked Tesla to bid on tender for government cars over in Israel. Israel and the Jews love Elon Musk. So these views and labels put on him just because of one apparent gesture are nothing short of deranged and quite disturbing. But like I said, not too surprising from that faction of people and their typical behavior. So as a long-term shareholder, I do take issue with all of that. But like I said, I've seen this before, I'm sure we'll see it again. It's just the nature of this company and Elon Musk, especially now that he's partnered with the president. Moving on and doing a bit better today, Intel on a bit of a hot streak here on the back of their new CEO. Market's really warming up to this guy. Lip Bhutan, plenty of industry experience, and the market seeming to change how it views this company. Really lining up for a classic turnaround situation here. Because just looking at Intel's stock price, was pulling back with the rest of the market, but on that announcement last week of the new CEO, shot up 14% and didn't even retest those lows. It's just kept climbing higher and higher here on good volume, and this could be the year that Intel turns around and breaks out after being smashed down for a few years now. Same with AMD, still trying to find a bottom down here. getting signs of accumulation, these fat green candles, gapping down, getting bought up. And I guess in one measure, kind of holding up a bit better than the market. Market's pulled back a lot over the last 5 weeks. AMD really only down a little bit. But I still think Nvidia could be setting up soon for a buy the dip swing trade. And like I said, even investment. If we were to get down to 103, I'm an investor at those levels based on good valuation. As I don't think AI is going away. I think it's accelerating. And I think all this stuff with tariffs in the White House, just all short-term noise within a secular trend. Nvidia GPUs remain the best in class. They're improving further with Rubin. Hyperscalers, application providers, industrial players, sovereign entities, physical AI, and humanoids will all need these chips. Market might also be a little bit on edge, waiting to hear from the Fed tomorrow. They're going to lean more dovish or hawkish. Any changes to their balance sheet, quantitative tightening, they have managed to shrink it down from 9 trillion in early 21 down to 6.8 trillion. What they basically do is digitally create new money, then go into the market and buy treasuries, a form of adding liquidity to the system, creating artificial demand to help keep yields low, credit flowing, as it pulls down the spreads on corporate bond yields on top of that, and then they can just let these treasuries mature and run off their balance sheet. Being able to turn it back on with just the flick of a switch. But like I said, the fears and pessimism are building hard. People feeling like we're in a recession and a bear market, even though US and global growth is still above 2%. Forecasts are coming down. And I guess if enough people believe it, consumers, CEOs, large investors, you can almost talk yourself into a bear market and a recession. If no one invests, no one buys. But if that doesn't happen in the coming months, Q2, markets could stage a strong recovery as we're coming from a spot where a lot of people are leaning to one side of the boat, vulnerable to go the other way. If we do have some positive headlines coming in, which I think if the market were to sell off into a deeper correction, 15-20%, I think that would kick in both the Fed and the White House put. Fed might hint at quantitative easing to restore confidence. They could very well turn dovish again and hint at an interest rate cut, and the White House would be more incentivized to get some trade deals done to also get some good headlines. But for now, many people expect the bottom is not in. We've still got plenty to go in this sell-off. Continued rotation into precious metals, including gold and silver miners as well. GDX trading up again today and just going out to a monthly chart on this. We've now closed at the highest level in over a decade and almost taken out intraday highs from nearly 5 years ago. Same deal with silver miners, having another good day. Pushing up and breaking out here. This is what's currently working in the market. Also holding up Chinese stocks. Excitement for Beijing's new policies. Exceeding tariff fears. These fears of tariffs are not causing Asian and European stocks to sell off. It's just US stocks at this point in time. But just looking at some recent data of the probability of a recession calculated from the yield curve, that's dramatically dropped as this indicator may not be what it once was. Been going on a few years now. Maybe the events from 2020, along with Janet Yellen, have changed this indicator in ways we're yet to understand. But no doubt consumer sentiment is soft here, along with consumer spending. Retail sales did only increase 0.2% for February on the back of a decline in January and below economist estimates. But just looking at the data, you can see a bit of a pullback in food services and drinking, but also gas stations. And what that tells me is people weren't driving as much. Not due to the price of gas, because that's actually come down, but rather bad weather, which continued throughout February in many parts of the country. And just looking at a recent survey of consumer spending expectations over the next 3-month period, more respondents are expecting to spend more on travel compared to this time last year. This is a pretty good discretionary spending indicator. But no doubt the retail sector still under siege by the threat of tariffs, come off really sharply in this correction. In fact, one of the sharpest pullbacks we've seen ever since the market bottomed out in late 22 here. So it kind of seems to me, in many people's minds, including big and small investors, that it's a foregone conclusion that tariffs coming from the new US admin are going to be bad, especially for the states somehow, even though they've got the largest economy and the lowest average tariff rate amongst all their major trading partners. Apparently it's not right to level the playing field, but what happens if it does? How many people is that going to catch off guard? It's not even been discussed as a possibility that the end result of this could be global tariffs coming down and free trade ends up exploding on the upside to the benefit of everyone, especially the states, which face much higher hurdles selling overseas than other countries do to sell into the states, which is often the biggest market for them as well. We've already seen a number of other countries start to meet the White House in the middle, like India, but of course many, especially in Europe, are not just going to bow down straight away to the new admin, but they're in a much weaker spot, not only with the size of their economies, but their economic growth. Them engaging in a trade war, I think, just leads to an inevitable loss for them, which their current woke leaders will probably be politically pressured to go to the table and get a deal done, which could all happen this year because we're already seeing some deals getting done between the US and Russia. Both leaders speaking this morning apparently went well, even apparently organizing a hockey game between the two countries in an effort to restore relations and bring down global geopolitical risks. And who knows, maybe we get a repeat of one of the greatest sporting moments in history, the miracle on ice, when a young United States hockey team, completely written off, expected to lose badly to the dominant Soviets back then in 1980, came back and actually won in a thrilling finish. But no doubt that would probably upset many people as well. They'd rather see the two countries at war. And we've got a bunch of other commodities still trading well. Copper, typically a good indicator of economic growth, used in many industries and applications. But once again, the market's not buying that either, even though it continues to push up, performing quite well this year. Also performing well today, one of my favorites that I'm a shareholder in, Up Fintech Holding, also known as Tiger Brokers. I have an account with them. Pretty good trading platform. Just came out with their earnings, absolutely smashing expectations. 186% surprise on the upside. 17 cents per share. The street was expecting 6 cents. Almost coming in with a triple. Stock up over 21% on good volume, breaking out to multi-month highs, but still lagging a little bit behind the Chinese large cap ETF, which has held up exceptionally well this year on the back of one of its biggest components, Alibaba, which is unbelievably on its way to already being a double from the start of this year. But just getting back to the market here, pulling back here today on weak volume. Did have a soft bounce there yesterday, did seem to find its feet a bit on Friday, but no doubt the Mag 7 still heavy volume here, still yet to be seen whether this is grinding and going to consolidate to try and form a low, or the market could still very well be on edge, kind of flicking back and forth here in the VIX term structure, now back into backwardation, looking at VIX futures. So once again, slightly in the dicey zone, even though my risk on off indicator is still risk on, shaded green. The S&P 500 oscillator has bounced. The market very well may come down and retest this 55.50 on the SPX. See if we can find some buyers there, put in a bit of a bullish divergence, maybe wash out a few more bulls. I'm certainly seeing plenty of bearish sentiment like we can see in all the surveys, but the headlines are so persistent and negative. And like I said, what came out of Nvidia today I thought was pretty exciting, and all of their customers will no doubt gobble up all these new Rubin super chips. They've got the cash to do so. Even if the market pulls back another 10%, I don't think they're going to stop building out compute power. Just like Tesla's not going to stop on its way to launching robotaxi, set to take off in Austin in July. Optimus bots set to be produced later this year, start working in Tesla factories next year for other businesses and potentially consumers. No amount of lunatics can change that. It's inevitable. But bond yields are stabilizing. Got the 2-year above 4%, and I guess the market will be waiting to hear from Jay Powell tomorrow. I think he'll just come out and walk the line, speak to softness with the consumer sentiment, maybe a little bit of consumer spending, but it's still too early to make a decision based on that. You'll probably note inflation's come down, jobs market's still holding up along with business spending, but for sure confidence and sentiment is a bit rattled right now, and we can see that in the VIX index at 21. So we'll see how the market responds to Jay Powell tomorrow, and then Friday could be a big one going into the weekend. Triple witching, options expiry, then next week, the last week of the quarter. Otherwise, for now, the rest of the world continues to dramatically outperform the States year to date. Will this go on for the rest of the year just like this, or will we see a correction? Will the rest of the world win against the States and tariffs, or will the US eventually come out on top? These are the questions that will be answered in markets this year, and I guess we all have to place our bets accordingly. Thanks very much for sticking with Click Capital, and I'll see you back here this time tomorrow. Cheers.